A lot of people have been focusing on the anti-monopoly arrangements that have hit the news over the past weeks. Many people feel that once the fines are out, that everything's in the all clear, but I think it really varies by subsector as well. Clearly, the regulator is waiting for the different players to come out with their self-review sometime in the coming couple of weeks. So I think what matters a lot more than just the absolute scale of the fines that are being talked about, which in most cases is not a substantial portion of market cap or even revenue or cash flow. But generally speaking, I think what's much more important is self-rectifying measures going forward, what they're going to be allowed to do and what they're not going to be allowed to do, and what impact that has on their recurring business. I think as we move into the coming year, so that's going to vary significantly, right? In terms of the ability to make acquisitions, it's probably a little bit harder going forward versus before with more scrutiny and oversight. In terms of the two choose one anti-monopoly, that's probably going to have a bigger impact on existing businesses versus, let's say, just the anti-monopoly and acquisition measure. So I think the impact will really vary by subsector and by company specifically as well.
Okay, makes sense. Just your thoughts on the broader market. I mean, a lot of discussion now as to whether or not the strong growth we've seen coming out of China, leading the world in many ways out of the pandemic, is peaking. But what does that mean if growth has peaked for earnings and what it means for the market going forward?
Well, we've certainly seen very strong earnings coming out of China in the first quarter and pretty decent guidance for the second quarter as well, similar to what we're seeing in the US. Remember that China had the COVID hit hardest in basically February and March of last year. And so first quarter was probably the lowest base. Therefore, first quarter this year is probably the peak earnings growth rates for China versus probably the second quarter in the rest of DM because they basically were hit more, in the April-May timeframe. So I think going into the second half of this year, people are going to be watching whether China's earnings and growth are going to be decelerating worse versus what people had anticipated. A few reasons. Not only the COVID normalization, but also the fact that China perhaps did not have as strong of a fiscal impulse or monetary impulse as some of the other parts of DM. The fact that China is now using this period of cyclical strength to implement more medium to longer term structural reforms, which is really the right thing to do over the future years for sustainable growth. And, just anything that might derail the growth momentum in terms of, let's say, return or normalization of supply chains and other EMs that may take away some of China's export share. So I think these are all things that we have to watch very closely, and any kind of signs of worse than expected momentum off a relatively low base might actually pose some kind of headwinds, particularly to the A-share market, which has been very, very strong over the last year and a half.